Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is April 1st, 2025. Good morning, folks. I'm excited to have you along for our deep dive into the markets, some intriguing news headlines, and a sprinkle of humor to start your day energized.
Let's jump right in with a quick market overview. The S&P 500 is currently trading at roughly $5,591.93, exhibiting a slight dip of about negative 0.1%. Over in the Dow Jones, the index sits at approximately $41,716.26, down by around negative 0.4%. In contrast, the Nasdaq seems to be enjoying a bit more positivity, trading at around $17,280, up by nearly 0.3%. The Russell 2000 is showing strength as well, hovering near $2,011.91, up by approximately 0.7%.
And for our friends tracking cryptocurrencies, Bitcoin is holding strong at nearly $83,788, with an uptick of around 1.5%. And Ethereum is hovering just under $2,000 at roughly $1,875, up by about 2.9%.
These figures set the stage for our broader discussion on market trends and what may be influencing these moves at this early hour. One common theme that we often see, and which is resonating today, is the cautious mood prevailing in traditional equity indexes, coupled with a selective appetite for tech-driven momentum that seems to be benefiting the Nasdaq, while digital assets like Bitcoin and Ethereum are also charting gains. It's a bit like watching a pot of soup, where the traditional stocks are simmering gently, but the flavors from the tech and crypto corners are adding an extra kick.
Now let's peel back another layer and take a deep dive into the major market trends that you've been capturing the attention of investors lately. One of the standout factors this morning is the global trade narrative, which has been bubbling up in earnest. As you might have heard, there's a report circulating from the Washington Post suggesting that the White House is mulling over a roughly 20% tariff on most imports. With President Donald Trump set to unveil broader global trade initiatives tomorrow, there's a palpable mix of anticipation and uncertainty. This potential tariff, if enacted, will not only disrupt supply chains overseas, but could also recalibrate the cost structures for American manufacturers and tech companies alike. It could, for instance, lead to repricing across the board, from raw materials all the way to consumer electronics.
What makes this tariff possibility particularly interesting is the potential dual impact it might have. On one hand is the protectionist boost aimed at domestic industries, which might even spur some local investments. On the other, there's the risk of inviting retaliatory measures from key trade partners, making global cooperation a bit more on edge. It's a classic double-edged sword scenario, and one that might just send ripples across multiple sectors.
Our friend in the tech sector is certainly keeping an eye on the tariff news, as tech companies are highly interlinked with global supply chains. Speaking of tech, another noteworthy development is in the semiconductor and chip intellectual property arena. Reports are circulating that ARM is actively seeking to acquire a chip IP supplier called Alphawave, a move that could bolster their position in the fiercely competitive artificial intelligence technology market. If successful, this acquisition could lead to a surge in innovation, not to mention a significant shakeup among the major players in the semiconductor space. Investors might view this positively, as it underscores the relentless forward momentum in tech despite certain headwinds elsewhere.
Moving over to the finance world, there is significant buzz about Brookfield Asset Management. They are poised to secure a majority stake in the mortgage lender Angel Oak, a deal that is expected to reshape financing dynamics within the residential lending space. With mortgage rates in constant flux and the economy navigating uncertain waters, this acquisition could be seen as both a strategic hedge and a growth opportunity. It might help Brookfield diversify its asset portfolio and tap into niches that traditionally have offered stable returns during turbulent times.
And who could overlook the intriguing play in the space and tech sectors? Shares of SatixFy plummeted yesterday before bouncing back thanks to a major development where MDA Space intends to acquire a company in a deal valued at $193 million. This jump in share price is an encouraging signal for the market, suggesting that investors are ready to bet on continued consolidation and technological integration in the space sector. With private companies and public market players alike angling to be at the forefront of space exploration and commercialization, such transactions bring a sense of excitement and renewed focus on innovation.
In today's whirlwind of news, the hospitality sector is also in the spotlight. Nightfood, a company that many of you might know for its innovative approach to late-night snacking, has made a strategic acquisition of Skytech. This move is intended to broaden its footprint in the burgeoning field of AI-driven hotel automation. Now that's an interesting twist. When you think of late-night snacks, you probably don't imagine discussions about artificial intelligence and robotics reshaping the ways hotels operate. Yet this acquisition underscores how even sectors that might seem mundane are undergoing transformative changes. It really makes you wonder, are we headed toward a future where ordering a midnight bite is as automated as checking into a hotel room?
Let's not forget the developments in healthcare and life sciences this morning. Revive Therapeutics has announced an acquisition of a molecular hydrogen program, a move that underscores its commitment to exploring innovative treatments for infectious diseases, rare disorders, and other challenging medical conditions. In parallel, Becton Dickinson is reportedly engaged in talks with its rivals regarding a potential consolidation of its life sciences unit. These moves signal an industry in transition, one where mergers, acquisitions, and partnerships are increasingly common as companies strive to pool resources, streamline research, and bring cutting-edge therapies to market more swiftly.
So far, we've covered quite a few major narratives, but let's ensure we touch upon each story comprehensively, including every nuance.
First, the trade tensions stirred by the looming prospect of 20% tariffs seize the headlines. With President Trump expected to outline broader trade policies tomorrow, investors are rightfully cautious. Could these tariffs potentially spark renewed trade disputes? And if so, how might global markets, especially those dependent on robust supply networks from Asia and Europe, react? Here's a thought to mull over on your next coffee break.
Then we shift to the story of Brookfield Asset Management. Their decision to acquire a majority stake in Angel Oak is sending ripples through the finance space. Brookfield, known for its robust asset management capabilities, is in a prime position to leverage this deal by benefiting from stable mortgage income even as market rates fluctuate. What does this say about investor sentiment in the broader real estate finance realm? It might be a strategic bet against market uncertainties.
Next, the SatixFy news. MDA Space's acquisition move, valued at $193 million, is a fascinating lens into a sector that's continuously overshadowing itself with technological marvels. The leap in SatixFy shares suggests that investors have a healthy appetite for space-related ventures. If space becomes the new frontier for tech innovation, how soon will we see more deals like this? And what might this mean for our blue planet's economy?
Now let's revisit ARM's pursuit of Alphawave. The semiconductor industry has long been a bellwether for tech health. ARM, with its long-standing tradition in microprocessor design, is trying to stay ahead by snapping up valuable chip IP resources. Such strategic acquisitions not only fuel product innovation but also help companies navigate a rapidly evolving technological landscape. It invites questions. Are traditional chip manufacturers gearing up for an AI revolution? And can mergers in the semiconductor space stave off disruptions from emerging players in Asia?
Turning our gaze to hospitality and automation, the acquisition of Skytech by Nightfood represents an intriguing confluence of industries. Not many of us would expect a snack company to be maneuvering into the high-tech hotel automation arena, yet this move highlights an essential truth about today's market. Every industry, no matter how traditional, is embracing technology to drive efficiency and enhance customer experience. It's both humorous and profound. Imagine a hotel where even the miniature shampoos come with an AI concierge.
On a related note, Revive Therapeutics is making a bold statement in the life sciences field by acquiring a molecular hydrogen program. This is not your everyday merger announcement. Instead, it is a testament to the firm's resolve to venture into cutting-edge medical research. It begs the question for our investor community. Are we witnessing the next breakthrough in therapeutic science that could redefine how we treat chronic diseases? Or is this simply a diversification strategy in an unpredictable market?
Lastly, our discussion would be incomplete without mentioning the nuanced negotiations in the life sciences sector involving Becton Dickinson. With talks underway regarding its life sciences unit, there is an air of anticipation. Investors will be keenly watching these discussions, not just for the potential consolidation benefits, but also for the broader impact such deals might have on the competitive dynamics of the global healthcare market.
Now, moving into our detailed sector analysis, let's break down what these stories mean for different parts of the economy. The technology sector remains very much in the limelight, with companies doubling down on acquisitions to seize market share and drive innovation. Whether it's through ARM's outreach to solidify its foothold in chip IP or Nightfood's foray into high-tech hotel automation, there's a clear trend. Traditional industries are merging with technology at an unprecedented pace. Investors who are tech-savvy are likely to find themselves braced for waves of innovation, even if that means weathering short-term volatility. After all, innovation is rarely a straight line upward. It's full of twists, turns, and a few unexpected loops, a bit like the plot of your favorite thriller.
In the financial sector, the acquisition moves by Brookfield are particularly telling. Mortgage lending continues to be one of those classic financial bedrocks, and as Brookfield looks to capitalize on Angel Oak, it reflects a broader strategy of diversification in uncertain times. With interest rates being in a state of flux and economic conditions as unpredictable as ever, the resilience of mortgage-backed securities and related financial instruments is a story worth noting. What will this mean for mortgage REITs, or even for retail banks? It's an open question that investors should keep in mind.
The life sciences and healthcare sectors are currently enjoying a phase of transformation catalyzed by mergers and acquisitions. Both Revive Therapeutics and Becton Dickinson are reconfiguring their portfolios. In the case of Revive, the acquisition of a molecular hydrogen program could unlock new therapeutic pathways, while Becton Dickinson's consolidation talks might signal a trend toward streamlining operations in an increasingly competitive global health market. It's almost ironic. You'd think our healthcare sector might take a break from change, but it seems innovation spares no one.
Global market implications stretch beyond the domestic borders of trade and finance. The prospect of 20% tariffs might nudge global supply chains into a new era of localized production, compelling international partners to rethink their strategies and possibly triggering a domino effect in emerging markets. The tech acquisitions, particularly in the semiconductor world, have ripple effects across continents. The ongoing global race for advanced chip technology is, in essence, a contest that could reposition economic powers for decades to come.
So what do we make of this rich tapestry of data and headlines? In my expert view, these stories converge on a central theme: a global economy in a state of flux, adapting to new realities while grappling with familiar challenges. Investor sentiment is understandably mixed caution amid potential shocks versus a hopeful embrace of technological and innovative renaissance. The markets are telling us that change is the only constant. And while some of these moves might induce short-term jitters, they are also laying the groundwork for a fundamentally more resilient, if complex, future.
Let's take a moment to explore some expert insights and predictions. Historically, when governments toy with tariff policies, particularly those as hefty as 20%, it doesn't merely tweak the numbers, it challenges the very sentiment of global trade. Such tariffs, if implemented, might trigger a cycle of retaliatory measures from key trading partners like the European Union or even China. This could create pockets of inflationary pressure, especially in industries relying on imported materials. However, if managed delicately, these measures may bolster domestic production and even give a lift to certain sectors, such as the manufacturing and tech industries. Imagine a scenario where American engineers, armed with new domestic supply chains, begin to pioneer innovations that rival those imported from abroad. That could very well be the silver lining in an otherwise stormy forecast.
On the technology front, the acquisition pursuits by ARM and Nightfood illustrate a trend where digital transformation is not a choice but a necessity. In a landscape where artificial intelligence, robotics, and cloud computing are rewriting the rulebook, companies are now compelled to integrate these technologies into every facet of their operations. This creates an ecosystem where innovation is the norm, but it also raises the stakes when it comes to competition. I envision a future where we may see micro-acquisitions becoming the norm, a flurry of small deals that altogether reshaped entire industries. It might sound chaotic, but remember, every revolution begins with a flurry of small, decisive steps.
The space industry, represented by the SatixFy and MDA Space deal, is another fascinating subplot. It may seem like science fiction to some, but commercial space ventures are rapidly turning into highly tangible business opportunities. With companies taking bold steps backed by major investments, the space sector could very well emerge as a significant driver of global innovation and economic growth in the coming decades. And let's not forget, space isn't just about rockets and satellites. It's becoming an arena for tech experimentation, AI integration, and even resource exploration. Who knows? In a few years, your everyday smartphone might just have components engineered in a lab that once relied purely on astrophysical research.
In dissecting these developments from a broader perspective, one cannot ignore the interplay between domestic policy shifts and their international repercussion. The interplay of tariffs, acquisitions, and technological innovations is painting an evolving picture of a global economy that's both interconnected and fiercely competitive. It's like watching a chess game where each move is carefully measured, but sometimes even the best-laid strategies can lead to surprising outcomes. Are we witnessing the early stages of a new economic order? Could the forthcoming global trade policies reshape the landscape in a way that benefits long-term innovation over short-term profit? These are questions that we, as investors and market enthusiasts, will have to ponder in the coming weeks.
When we narrow our lens to sector-specific analysis, technology stands out as a leader in driving change. The semiconductor battle that ARM is engaging in is not merely about market share, it's about ensuring that the next generation of devices is capable of supporting an even more data-driven, interconnected world. At the same time, automation in hospitality, as seen with Nightfood's acquisition, exemplifies how even everyday industries are embracing technology, redefining convenience and efficiency. And while some of you might chuckle at the idea of automated hotel check-ins paired with midnight snack deliveries, think of it this way: if we wouldn't want our homes to be smart, why should hotels be any different?
Finance, too, is undergoing interesting shifts. With firms like Brookfield strategically acquiring stakes in companies like Angel Oak, the industry is poised for a more diversified, resilient approach to risk management and yield generation in uncertain times. This tactic, diversifying assets to minimize downside risk, could very well become a stable strategy for financial managers worldwide, especially as economic landscapes shift faster than we might expect.
The life sciences and healthcare sectors, with their emphasis on M&A activities, are another microcosm of broader market transformations. The Revive Therapeutics deal and the Becton Dickinson discussions not only signal an appetite for innovation and consolidation, but also remind us that medical breakthroughs rarely occur in isolation. Instead, they are the fruit of a rigorous quest for efficiency, collaboration, and yes, sometimes a dash of risk-taking that could redefine how we approach health challenges globally.
Looking internationally, the potential global implications of these domestic and sector-specific moves are significant. The anticipated tariffs could catalyze a wave of protectionist measures across economies, altering how goods are traded, priced, and valued. In contrast, the cross-border tech acquisitions may continue to blur the lines between national markets, reinforcing the notion that technological innovation is a borderless pursuit. This dynamic creates an environment where investors might have to simultaneously balance domestic policy risks with the boundless opportunities offered by global tech and innovation trends.
As we wrap up this episode, let's reflect on a few key takeaways. First, the traditional equity indexes are showing mixed signals. Slight declines in the more established markets are contrasted by a rally in sectors driven by tech and digital assets. Second, policy wins, such as the potential 20% import tariff, are stirring up conversations about future trade relationships and competitive dynamics that could have ripple effects far beyond the immediate headlines. Third, strategic moves by leading players in technology, finance, and life sciences underscore a broader trend of consolidation and transformation that will likely redefine these industries for years to come.
I'd like to leave you with some thought-provoking questions as you sip your morning coffee. How do you think investors will adjust their portfolios in light of the looming tariff discussions? Could the tech acquisitions we're seeing now pave the way for a new era of innovation that disrupts traditional market structures? And perhaps most importantly, what risks and opportunities do you foresee emerging from the global trade dynamics that are currently in flux?
Before we sign off, remember that Pantheon AI is here to serve as your information co-pilot. Our aim is to ensure that every market development, every strategic shift, and every bold acquisition is brought to you with clarity, precision, and just the right touch of humor to keep things lively. After all, learning shouldn't feel like a full-time job.
I want to thank each of you for tuning in this morning. Don't forget to come back for our next episode tomorrow. As always, if you have questions or need deeper insights, feel free to engage with our AI co-pilot. Until then, keep analyzing, keep questioning, and most importantly, stay curious.
Have a great day and see you tomorrow. And remember, learning shouldn't feel like a full-time job.